Okay, hold on a minute.
We are live. It seems like we have been put live now. So we will start while Ntate Tukwane is finding ways to share his screen, or maybe we'll start with Ntate Mpete and then Ntate Tukwane will come later after he figures out.
I think it's here now. Let me see.
The screen sharing.
Can you see it?
It's coming.
Can you see it now?
Yeah.
Yes, it's coming.
It's clear now.
Okay.
Okay. Thank you so much. I would like to welcome you both, Bontate, to this webinar. My name is Mahadi Onyanguru, working with BEDCO. Welcome to our virtual expo web series of webinars. Tatsilena Rebuaka, funding MSMEs. Welcome Tate Tukwane from IDC, and welcome Ntate Tao from IDF Capital. I think we just had another session in the morning, we were talking with the banks, and those are traditional methods of banking, as you know, the way they are regulated. And it's very difficult also for our MSMEs to access those. So we want also to explore the non-traditional methods of funding for MSMEs. And hence we're having this session. Thank you for taking your time to be with us. I would like to give Ntate took an opportunity to introduce himself fully and also to say his piece about non-traditional financing options for MSMEs and also how MSMEs can benefit from this. And this will also help us also to say, as Lesotho, what are we doing in this sphere, and how can we then adopt some of these things in order to assist our businesses. Will you please introduce yourself? Yes, thank you.
Thank you, Matt. Can everybody hear me? Can you hear me?
Yes, Nate, we can hear you.
Okay, my name is Tukwane Tolo Kimusutu. Hi, Suki Kimasiru. And I would even venture to say Kisi Point. I worked for a long time at LNDC, and then I moved on and worked at the Free State Development Corporation. Then I worked for the German Development Agency. And then after that, I joined IDC, which is where I am at the moment. So I've spent all of my working life in the development finance space. Just my presentation, I would like to just give you a brief overview of who the IDC is. And also just to maybe reemphasize that this expo comes at a very difficult time and trying time for financiers, particularly development finance institutions such as ourselves, who cannot walk away from the risks that have been brought about by COVID. Unlike commercial banks, we are required to assist. So even though some of our clients are now in trouble from the lockdowns that have happened, we are required to work with them and hopefully see that they work things out and get back to normalities. Our strategies at the moment going forward are based strictly around the COVID environment. It's an unusual environment. So some of the things that we do now are unusual. In some cases, for example, some of the products that we offer, we do not normally offer, but we offer them at this point in time because of the COVID environment. We don't do trade finance, for example, but under the environment that we're in, we have started to do trade finance, and hopefully maybe it will continue. We also do some working capital finance. Okay, IDC, like the LNDC and BEDCO, is a government-owned institution. It's owned 100% by the South African government. And unlike many other development finance institutions, we are self-financing. So we don't receive any funding from government. I have to emphasize this, that we don't receive funding from government. I think the last time that we received any funding was in the 1950s. Why I emphasize this is because a lot of people tend to think that because we're a government institution, they can come, we provide them with the assistance, we provide them with finance, with debt or loans, and then they figure, well, it's government money, it's my money, why should I pay it back? If they don't pay it back, we'll go under, and the South African government will not try to assist to help us out. So we make our money by funding small and medium enterprises in South Africa. We also make our money by funding the same institutions outside of South Africa, but on the African continent. So we operate both in South Africa and on the African continent, and on the African continent. We employ about 838 people, and most of them are professionals in the areas of engineering, lawyers. We employ also lots of accountants and social scientists and other scientists. We do this because when we assess a project, we need all eyes on board. We need economists, we need engineers, we need all these people to assist us when we are making a financing decision. We, as IDC, we operate in the small, medium, and large enterprise sector. This is the area here. These are companies that require at least, in South Africa, at least 1 million rands or more. And I emphasize the more because it doesn't matter whether you're asking us for a loan of a million or 50 million. We will expend the same amount of resources to try and recover that loan or to assess your ability to repay that loan. We will expend the same amount of resources on a small project and on a large project. So what we've done, we have another subsidiary called SEFA, which stands for Small Enterprise Finance Agency, which operates on the lower end. They operate more on projects that are less than 5 million, but mainly in the 1 million to 50 or 20 million or 50,000 to 20,000 area, whereas we operate more on the larger side of this. So we both specialize. We operate in both areas for large and for small projects. We share them. If the project is too small for us, we would then advance it to them. If for them it is large, we can also co-finance with them. They have most of the expertise in the smaller business environment. We have more of the expertise on the larger or medium-sized projects. But while SEFA's mandate is only limited to South Africa, the IDC itself has a mandate that crosses the border. So we can finance projects outside of South Africa in the rest of the continent, including in Lesotho. But we have a product, for example, for funding smaller deals or smaller projects outside of Lesotho. We have a product that is referred to as a line of credit, which we advance to similar institutions as ourselves. Like, for example, in Lesotho, we would advance a line of credit to BEDCO or to LNDC. And then LNDC or BEDCO would then be able to finance the smaller projects that we cannot do. And on the larger projects than that, then we can co-finance between ourselves, LNDC and BEDCO, or any other financier that is available or interested in those projects. So for the smaller projects, we have a line of credit that we can advance to local institutions such as BEDCO and LNDC. While we were established primarily to support industrial and manufacturing activities in South Africa, and also to support their enablers, such as infrastructure in terms of roads, railways, logistics being things like warehouses, refrigerated warehouses, grain silos, and things like that. We have evolved over time, so we can do those things, and over and above that, we can also now do support tourism assets, things like hotels, and also services such as hospitals. We can do support hospitals, including private hospitals, PPP, clinics, and laboratories. We also are able to support newer projects in the movie making or television making, not television program making sectors and documentaries and the likes. Oops. We can participate at any stage of a project, from idea all the way up to bankable feasibility. But most of our work is done primarily with entrepreneurs that are looking to do startups, or what they normally refer to as greenfield projects, and also to do expansions. In Lesotho, we can advance loans, and we can also, when necessary, take an equity stake in projects, which means we are also willing to take a bigger risk where we would own part of the project. But even when we own part of the project or the company that we are financing, we do not want to be a controlling shareholder. So we always leave that to the private sector or to the people that we are funding. They should be the ones in control. They should be the ones that are majority shareholders. So even when we take up an equity stake, we would not take up more than 30% of the project. That maximum we can take is 30% of any one project. At this specific time, or at this point in time during the COVID environment, as I indicated, we are mainly interested in advancing loans, because once you've advanced a loan within a very short period of time, you can start being repaid. Whereas if we were to take up an equity stake, it can take a few years before a dividend is realized. So during this period, we prefer to advance loans directly to the company, or in some cases where LNDC or BEDCO would like to be involved, we can also advance a line of credit to BEDCO, and then at the same time co-finance the project that is in Lesotho with BEDCO or with LNDC. At the moment under COVID, we used to be able before this to finance up to 50% of any one project. But now going forward with COVID in place, we are saying we need partnerships. We need more eyes on the ground. We are sitting in South Africa. The project is in Lesotho. We need people in Lesotho that will be able to look after the project and who also have skin in the game, who have put in their own money into that project. So the maximum we can finance at the moment is 30% of the total project cost. And we are hoping that if it's a larger project, then we can co-finance that with LNDC, with the BEDCO, with the commercial banks, and with the IDF, which I think bidding works for. And anybody that is interested in, we are willing to put our hands together to try and finance the projects together. Our due diligence process is very detailed, and to some, it's so detailed and so thorough that people tend to think that we are trying to run away from funding the project, whereas we want to make sure that what we are funding makes sense, particularly because we don't take, in most cases, we will not take any security beyond the project itself. So we're not going to want to take your house and your dog and car and whatever as security. We will like just the project as security. So our due diligence is very thorough. And in most cases, we want to see that the technical expertise is in place, the management will be in place, and that the project promoters themselves have something to lose. It shouldn't just be that if things go wrong, the financiers, being LNDC, being BEDCO, being ourselves, being anybody else, loses, and the project promoter does not lose. So we want to see some skin in the game. One of the things that we also look for, now this thing keeps coming. One of the things that we also look for is people tend to look at statistics, and they will say, well, Lesotho is importing so many chickens or so many eggs. Therefore, if I establish a project, I can take such and such a percentage of that. It's not enough for us. We would like to see some work done to say that you will actually, when you produce, you will actually make a product that is acceptable to the market. So in most cases, we'll look for things like off-take agreements or some sort of an understanding with distributors or retailers that if you produce the right product at the right price, they will be able to take your product. So it's not enough just to quote statistics. We want more than statistics. There's a lot I can say. Maybe I'll answer most of that during the question time. At the moment, for example, in Lesotho, we are looking at the emerging cannabis sector. We have quite a large pipeline of projects, of inquiries and loan applications in that area. We're also looking at the agriculture and agro-processing space. Also on the tourism side, we're looking at sports tourism and business tourism, where we build hotels together with local Basotho. We're also looking to see if Basotho are looking to take, let me just switch this off. We're also looking to see if Basotho are able or want to take up, so let me just switch this off. Want to take up shareholding. There's a large clothing and textile sector in Lesotho, and for the most part, I think it is still foreign owned. It started in the early 80s, but up to today, 30 or 40 years down the line, it is still primarily owned by foreigners. I think it's time for Basotho to start maybe owning some of these factories. We are prepared to talk to those that are interested to see if we can structure or create design products that can assist them to take up some of the existing. We're also looking at people that are looking to take up, how do I say, companies that the government is offloading, no privatizations, things like hotels that the government owns but is looking to offload. I think we would be available to start discussions on those. There are other areas where government owns businesses, and we all know that most governments are moving away from that area. So we are open to do business in Lesotho, and if anybody's interested, we are willing to talk. Thank you very much, ma'am.
Thank you so much, Ndata Tukwane. I don't know if there are any other questions from the audience yet, or we give Ndate Mpete an opportunity as well to speak to the non-traditional options, and then we'll discuss them after that. I think I should do that, and then we'll have a discussion after his presentation. Thank you, Ndate Tau. I think I'll give you this platform to introduce yourself as well fully and also speak to the topic of today. Oh, will you please unmute yourself, Ndate? I think you're still muted.
Okay,
It's okay. Okay.
My name is Mpete Tau. I'm a Mosotho. I work for a company called IDF Capital. I've been with IDF Capital since inception. We are a Black fund management company and privately owned, so IDF is not a government institution. It is IDF is about just over 12 years old, and it's Black female owned. It's owned by a Black female in South Africa. We participate in the SME space, but we have two types of, because of the event today, where I have to address international opportunities. We have local funds and funds that deal with the sub-Saharan countries. So locally, we have the likes of Shell in the oil and gas space. We have Telkom and Liquid Capital in the ICT space. We have Gibela in the rail space, and we have AECI in the chemical space. So those are local meaning South African products. That only suits South African products, and that's for enterprise and supplier development funds. Internationally, we have AIF, Alethea Identity Fund. We fund sub-Saharan countries. We fund, but we have only identified a few for now. So we have South Africa, Lesotho, Zambia, and Zimbabwe in the southern region, and we also have Nigeria and Ghana in West Africa. The aim of the fund is to, so I'll just focus on AIF for today because it will suit opportunities in Lesotho. Is that okay? So the aim of the fund is to invest and support in high growth SMEs and to focus on women-owned and led businesses. These are businesses that are female-owned and they are at least 2 years old, meaning the business that stands an opportunity to be funded must have a track record of 2 years. It must be female-owned or majority female-owned, majority meaning 51%. We fund from $2 million to $5 million, and we're looking for equity transactions, not just debt only. So the office is based in Illovo Centre, where I am, and that's for the southern region. But for West Africa, the office is based in Nigeria. So Nigeria takes care of Ghana and Nigeria. We are looking for opportunities in Lesotho, and we can co-invest where possible. We have looked at a few transactions in Lesotho. I won't disclose the names for confidentiality reasons, but there are a few that we're looking at, and we'll see how it goes. And we're still looking for more. So when the whole idea of this fund is strengthening and increasing the participation of women-owned businesses, women in business, women in supply chain space. We provide financial and non-financial support on this type of, from IDF on that fund. And our investors are from various countries around the globe. That's about it from my side.
Okay, thank you so much. Or maybe before I go to specific what we just spoke about, there's a request from Dade Tukwa to maybe give the contact of Bafumane guys, so that maybe those that are interested may.
Okay, I can give you my number. Can I give it on this platform?
Yes, I think you can, because the comments are coming on this platform. So I think they'll take them.
So you want my contact details?
Your contact and Dade Tukwa's contact details, yes.
My contact, mpete@idf.co.za. Mpete spelled M-P-H-E-T-H-E. My contact number is 084 600 5012.
Thank you. Thank you, Dade. And Dade Tukwane, maybe if you can also give your contact details, and then we'll move on to questions.
My email address is Tukwane T for Tulu, Tukwane T, one word, at idc.co.za. Tukwane T at idc.ca.za. And my number is 072 657 5610. 072 657 5610. Thank you.
Thank you so much. I think they've noted them down. I have maybe a few questions or even observations to the presentations that were just made in relation to MSMEs ecosystem ka hara Lesotho. As you know that the MSMEs, they're the largest job creators, really. But
Yes.
like I did earlier, about who access the financial products from traditional banks. So, well, one of the reasons why we are even having this discussion here is those that we're saying are non-traditional. So basically, what I'm getting from the two presentations is there's funding available for high impact, viable businesses. Haholo Ndatempiti talked about women-led, women-owned businesses. Even though from the IDC side, they're not specific to which gender should be dominating in that in the ownership, but I think this is important now, especially the marginalized groups, which is women in this instance, they are probably even impacted more than what I'm also getting is that both IDC and IDF, they can actually fund businesses in a form of equity financing. So I think our MSMEs should be then ready to say they are willing to share ownership for a period of time. A specific question to you, Ntate Tukwa, is up to how long are you willing to be a part of a business as a shareholder? Okay, now we're good to go. We can part ways. It's been good business.
I think if I can attempt to answer that, we don't want to own your company, or we don't want to own anybody's company. The reason we would get in is because maybe if we provided only debt, that would become too heavy a burden on the company. Okay. And like I said, when we do that, the maximum equity we can take is 30%. We wouldn't want to take more than 30%. And as we take up the equity, we will then negotiate with you as to when, for how long we should stay in, and when we should exit. And when we exit, who do we exit to? I think now Lesotho now has a stock exchange. It may be easier to exit onto the stock exchange, or the owner may not want anybody else, but we will then agree on a formula as to when we do exit, this is the rate at which you will buy us out. So that will be agreed upfront, or this is the formula. It will be agreed upfront. And when that exit happens, will also be agreed upfront. But remember, it's an investment. We want some sort of a return. So you can't say it will make losses for 5 years, and after 5 years it makes profits, therefore get out. We would want to share some of the profit and then exit. Yeah, but it's negotiable.
Well, thank you so much, Ndate. I think it really is important because some of our businesses, what you indicated was you also find startups as well. You did indicate that also.
Mm-hmm. Yes.
Yeah, both startups and okay.
And yeah, but most of our funding goes towards startups. If you look at our portfolio at the moment, I think 75% of our funding was is mainly for startups.
Okay, that is what is it then that you require from Basotho businesses that would then have an appetite to come to your office for?
We don't have an application form as such. What we want to see is your business plan, and then based on your business plan or feasibility study, we can start talking.
Okay. Thank you so much. Now that you've given your details, I think people are listening to this and they will do so. Ndate, I think the same questions apply to you, Ndate. How long, when you take up maybe a certain amount of stake from a business, 25%, 30%, yes. How long are you willing to stay in a business, or at what are the conditions you would want to exit the business? Yes, Ned.
So the starting point is that we don't have an application form for this particular fund. we're looking for a business plan and supporting documents. So supporting documents can be contracts in place, offtake agreements, anything that can be useful to support the transaction. Now, we maximum period we want to take is 5 years, because we're looking for equity transactions, and the minimum we're looking for is 26%.
Okay, thank you so much. As you indicated, the businesses are women-led or women-owned. So are you telling me, those that are male-owned do not have, in terms of AIF, they cannot get funding regarding AIF, but they can still get funding?
they can be looked at if we can demonstrate that there's a significant participation of women in the business, and either they are managers or producers or distributors or consumers, but you need to demonstrate to the financier that this is a female-run business, even if it's male-owned. And you'd have to demonstrate things like procuring from women-owned businesses, a whole lot of, so it's women-orientated, yeah. The answer is that we can have a look at a male-owned business for as long as it ticks those boxes.
Oh, I think that's perfect, because some people might, like Dr. Conrad said, discriminating. Well, I don't think it's discriminating per se, but I think, yes, as we also look at marginalized groups, it's important that we empower those as well. Let me check again the comments that we have. Yes,
I was going to say, just for the record, we are not discriminating against men. We're just trying to empower women, our women.
Yes, definitely. And Dr. Tukwana, I hope that is clear. This is very important for our MSMEs, because as BEDCO, what we do is to assist our businesses so that they can become bankable and also ready for investment. So I think the products that you both have are very important, and also our job is to make sure that we assist those that are high impact businesses that show that they can create jobs in the long run and become large enterprises. So I think for our clients, this is very informative, and this is very important. I don't know, Horena, in terms of, okay, no, that's fine. I think that question was answered already. I've written a couple of questions here, but I think they have been answered. I don't know if there are any other questions. Otherwise, we have 15 minutes that we can talk. If there's anything more that you want to say, we still have 15 minutes. Or if there's nothing else, even from the audience, then maybe we can wrap up.
Maybe I can just say something about startups. Normally we say a startup, and the thing that comes in your mind is, I'm starting from scratch, so I need to get funding. It's very difficult when you're starting from scratch. There are a lot of businesses in Lesotho that I've seen where people are already doing something. Some of them are bottling water, but they're doing it in their garage. They're bottling water, which means they're selling the water to somebody. They have a market out there. What those people need now to do with your assistance, which is your assistance as BEDCO, is to go to the next level. You would call it expansion, but when you approach us, I would call it a startup. You are a startup in that you've been operating informally from your garage. You have a market, I think maybe Pick and Pay or whoever is buying your water. Now you want to buy a machine that automates, that does things that, you want to go to the next level. We will call it a startup, but then you've already overcome one big element in that you don't have to prove the market. You already have a market. Now you just need to expand to get the market. You will call it expansion, I will call it a startup, because you're formalizing what was hitherto, how would I say, an informal business. You're just formalizing it now. So even that we will look at. Thank you.
Okay. Thank you so much. I think that is important, isn't that? Continue.
Oh no, I'll wait for you to finish first. Sorry, man.
Oh, okay. No, I was saying it's important that some people may think that when you say startup, then you mean if I wake up and have an idea. I also realize that IDC also funds ideas. I'm interested in what type of ideas and at what level of ideas. I know that of course they have to have some their capital, maybe 70% of the capital financing needed for the business,
That
and
one, yeah.
30%. But what type of businesses are you more into? Tech? Are you more into agro processing, or any industry is fine when it comes to?
Yeah, any industry is fine because we have IDCs divided into sectors: agro processing, mining, whatever sector, and they compete. They all have an allocation of a budget. So any sector that you come, as long as it fits within the IDC, we'll have somebody that will have a look at it. So we don't say we favor mining over agriculture or anything else. It's any sector, but funding of ideas, it's the most difficult part of our funding processes. It's what we call project development. That means you are developing something, and when we invest in it, we're not lending. We can't lend you money to develop an idea. What if the idea proves not to be viable? Are you going to pay us back? So what happens is at that stage, we agree on how much do we invest, to develop this thing. We develop it, we do the feasibility studies, we do everything, but we fund it jointly with you. And then at a later stage, when it is now viable, or when it's what they call bankable, but once it becomes bankable, it becomes easy to finance. Not only would IDC be interested in funding, but I think Peter also would then be, but then he waits for 2 years. Others in the sector, in the financing sector would want to fund. So you may find that you and I know for mining projects, for example, we invest in feasibility studies and stuff. We may have invested maybe 10 million and our partner on the other side invested 20 million. But when it is bankable, people will buy us out for 3 or 4 or 5 times the amount that we invested. So it's quick money, but it's also very risky money in that it may not, at the end of the day, prove to be viable. So it's the difficult part of it is that you need money, we need money. We have the money, but we also want to see your money because we will be co-investing in the development of the project until it is bankable. So that's the most difficult, but I'm willing, if anybody wants to discuss it outside of this, we can discuss it. Thank you.
Thank you so much. The Tempete had wanted to say something that he can go ahead.
No, I just wanted to say 2 things. I just like Ndate Tukwani Cholo. I don't mind people calling me. We can bounce ideas sometimes. Just to, I know sometimes people don't apply for this type of funds because they think they are meant for certain individuals. There's no such thing. If you think you meet the AIF criteria or you're close, let's talk. Let's see what you have. If it doesn't work, it doesn't work. If it works, it works. You'd rather try than regret not trying, you know. And the second one is that on technology, we have, because of the ICT funds that we have, we fund innovations. This would be not at conceptual stage, but pre-revenue. So if there's people out there who have innovations of some sort, technology, they can also talk to me.
Oh, perfect. I think that is perfect. Let me just see if we also have any more questions. I'm seeing comments that are saying big ups that Empathy for empowering women. And also that this is a very informative discussion and people are very appreciative. I think at this point, our audience, maybe just to wrap up, happy to say there are several types of funding for MSMEs. And I think our MSMEs, Lesotho, they should not feel like maybe the traditional way is the only way. There are all sorts of ways to fund businesses. Us as BEDCO, we are really looking into this and to partner maybe with yourselves as well, to say how then can we assist our MSMEs. On our side is development of the business itself and making sure that it's well structured, and on your side is the funding. So we are really looking forward to partner with yourselves and to help our MSMEs access funding, and also to give post-funding support ourselves as a way of maybe mitigating risk, and also to say we are here to make sure that our MSMEs meet the requirements, and also post-funding, they are also there to manage the business the way it should be managed. So we're here to support as well. Otherwise, I thank you so much for your time, and this has been very, very informative, and I'm sure a lot of people appreciate it. Thank you so much.
Thank you very much.
Thank you, Dr. We will get in touch, and you will hear from us, both Dr. Mpete and Dr. Tukwane, you will hear from us, because I'm sure after this webinar, a lot of people are going to ask questions. They're not asking now because they're still trying to marinate the information, digest it.
They must enjoy the break first, the festivities.
Oh, and then come afterwards. That's the plan, can it? I'm sure. I don't know if there's anything to enjoy, though. We've been on break since March, and it's time.
We are working much harder now that we're working from home than we were working when we were in the office.
That is true, though.
For some of us, we are still at home. They don't want us back in the office because we do more work from here.
I can understand. It's still a bit volatile out here. We're also working from home, but thank you so much. I think
Thank you.
We will not stop. And thank you again.
Thank you.
Thank you.
Bye. Bye.
Bye.